This week, we're talking cold storage and we'll touch on trade. Welcome to the Weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner. Back with us again this week is University of Kentucky's Kenny Burdine. Kenny, how are you?
I'm good. How are you, Megan?
Nice to see you. We're actually on the road today. It's meeting season, and I think that that's just kind of the the tricks of the trade right now for most of us.
Remote location, huh?
Always on the go. All right, we'll get into the details of the cold storage numbers come up. We'll talk a little bit about trade in Mexico and tariffs as well. But first, let's recap what happened this week in a not so great week in the markets.
Let's do that. So the five market Fed steer price, I kind of would like to use for our first slaughter cattle value, was down $1.50 as of this morning. I thought there was a chance we could take it higher this week, but it doesn't look like it will. The volume was light at that time, but the board was down today quite a bit. So we're going to be off on Fed cattle for the week. Interestingly enough, for the week, live cattle futures were largely unchanged. Gonna finish. They finished today at 197.73. Choice box beef actually improved a little bit, coming in just under 312. And the interesting one that we might talk about a little bit later is that March feeder cattle actually gained $7 week over week. And this was a down day today for March feeders, but they were actually up about $7 for the week. I think that's worth pointing out because we talked about risk management a couple of weeks ago, Megan, and it's interesting that we may be getting a chance here to do something on the feeder cattle side. So that would be kind of my take on the markets on the cattle side. We'll shift to hogs and then we'll talk about other stuff. But national base hog carcass price was off by a little less than $1, 86.81 for the week. Pork cutout value is unchanged, but the one that kind of stands out on the pork side is that April lean hog futures price, which was down about $4 for the week. Closed today at 84.07.
Kenny, when you take a look at these numbers, obviously it was a pretty rough day today in terms of prices. There's been a lot of volatility throughout the week. Are we trying to find the lows right now, or are we just really kind of navigating a little contentious and volatile trading environment?
I think it's mostly the latter, although you could certainly argue the former. But I think the market's just trying to figure out where the fundamentals are at the time. There's been talk about the trade, stuff for a while, and it's we should probably say whatever we say today on February 28th could absolutely have changed by the time someone watches this tomorrow or early next week. But it does sound like that tariffs are going to go into effect next week. Mexico and Canada, and probably an increased level in China. That may have driven what we saw today on the board. I didn't watch the board real closely on every species, but I looked at feeders at one point earlier today, and I'm pretty sure they were up, and then they closed down, significantly. And of course, live cattle, like you talked about, were down quite a bit, over $3 today on that February contract. So I think a lot of it's just trying to process what's going on and what's going to happen in the next few weeks.
Let's talk a little slaughter numbers. Specifically, I mean, we'll talk both, right? Cattle and hogs both, but we've seen kind of a pullback in some of the numbers on the cattle side of things.
Yes, and so let's start week. Let's start week to week. So down 0.5% from last week, 566,000 head. That's the projection for this week by the end of the week, so through tomorrow. But that remains down pretty sharply from, I guess the way to say it would be year to date from last year. So we're off quite a bit from 2024 year to date. Hog slaughter wasn't changed that much, virtually flat, 2.54 million head, but much like the cattle side, down quite a bit year to date. So we're not pushing a lot of cattle through right now. The gap may have narrowed a little bit the last couple of weeks, but again, we're processing quite a bit fewer cattle so far in 2025 than we had at the same time in 2024. The only other thing I'd kind of pointed out, kind of looking at what kind of stood out to me, is the calf slaughter number, which year to date, year over year, so in other words, through the first 7 weeks of this year versus last year, down by over 32%. And that just stood out to me. And I think it may speak to a couple of things. I think, A, you've got a strong market here. So the incentive to add value to those calves is out there. The other thing that I was going to mention that I think probably is at play, and this may not has not gotten a lot of attention, maybe it should have, but one of the fundamental things that beef on dairy has changed, right, is the potential value for those dairy steers. And your calf slaughter, your veal market typically is driven, by those dairy steers. And I think the fact that we're seeing much less of that probably points to A, higher market, and B, B, more of those dairy-born steers being beef crosses.
How much and how important is that beef on dairy right now to that market, to supplies in general?
It matters. I get that question a lot. In fact, my friend and colleague James Mitchell at Arkansas, that I think Megan, we put something together back in the fall looking at this very thing. So, from the dairy perspective, I want to be clear that it's very significant, right? You can add a lot of value to these calves from a dairy perspective, and honestly, the marginal cost difference is really almost insignificant. So it's a really logical thing for a dairy operation to do. Um, a lot of people have talked about the percent that beef on dairy is going to account for the entire beef production, over time. And that I think sometimes gets overplayed a little bit because we have to remember that these beef on dairy calves are just replacing what were full dairy calves, right? So unless the total number of dairy cows changes, then it doesn't affect the number of calves born. What it does affect is the makeup of some of those dairy calves. So, a long way to answer your question here. Does it matter? Yes. In terms of beef production level, I think it's smaller than a lot of people think in terms of the actual beef production impact. You're definitely changing the makeup of those calves, but our estimates, we're kind of in the ballpark of 0.5% to 1% actual impact on beef production. Now, again, you change the quality, you change the efficiency, you change a lot of things. But beef production levels, something in the ballpark of 0.5% to 1% right now.
Big report out this week, or the most significant reports out this week, cold storage numbers. As you take a look at beef and pork supplies and cold storage, what are some things that those numbers are telling you?
Let's start with, I guess, the high level numbers. January frozen beef supplies up 3% from December, but really unchanged from this time last year. And of course, cold storage is kind of captured at the end of the month. So you can kind of think, from the end of January, from the end of December to the end of January, up 3%, but unchanged from the end of January 2024. Pork supplies up 3% from December, but down 11% from last year. And I think, both of those things are interesting to me. We don't know exactly what to make of slaughter levels so far this year. I'm surprised they're not as much as they are. I think given the number of cattle we expected, lower beef cattle slaughter, I can't really say the same on the pork side. We're kind of watching it. And you look at those stocks numbers, and it would just kind of simply point to the fact that we've got about the same amount of supply of beef in cold storage we had last year, but quite a difference on the pork end. The only other one I looked at, I kind of you and Scott used to joke about bacon all the time, but the belly story is an interesting one, and I don't know what to make of it completely. But we're up 24% from last month on belly supplies, but still down 39% from January 2024. So the supply of bellies out there for bacon is something worth keeping an eye on again.
I mean, do we have to worry about bacon shortage when you look? I mean, I feel like breakfast is going to be the most expensive meal of the day. You look at eggs with what's going on with HPAI and its impact on the laying industry. 39% decline in pork bellies from a year ago. We may have to switch to steak for breakfast.
It's going to be interesting. But between the eggs and the bacon, yeah, breakfast is becoming a more expensive meal. I really hadn't thought about it till you said it, but you make a really good point, Megan. Those are paired together pretty nicely. So
We'll have to definitely continue to watch it. I think, and I know everybody like makes fun of me because I grew up on a hog farm and a cattle farm, right? So my dad's always like, "Well, Megan, everything's better with bacon. That's what we should be talking about." Um, but thinking about the demand and then how much are we watching one with these uptick in essential prices, right? So think about eggs, think about bacon, or in beef at the grocery store. How much are you watching consumer confidence and some of those reports as well, thinking about the strength and demand, because that's so critical to this full price picture.
Yeah, I think that's a really, really well said. And, in all honesty, it's probably one of the things that's not been said enough is just how resilient the consumer has been. We can talk about how high retail prices are for certain things. You mentioned beef, certainly eggs. I always like to point out that, they're that high because folks are paying that, right? And if it wasn't moving off the shelf at those prices, then that would suggest that that wasn't the market clearing price. So, yeah, I think that's something that's been a little bit lost is that demand has been pretty strong across the board. Proteins are expensive right now. And yet, we still seem to be, snatching them up at pretty quick pace, even at these prices.
And thank goodness for that. I think that's helping, right? Provide the support to the market and keeping things moving in the right direction for the most part.
Absolutely. I get that question. I get the question a lot when I travel the state. At what point should I become concerned that this is so high, folks stop consuming it? And when people ask me that question, they're kind of coming from the perspective that the price is fixed. And I think we forget price is not fixed, right? Price is fluid, and price becomes a reflection of the market. Price is not the market itself. So the fact I would be much more worried about livestock prices if retail prices were not sustaining the levels that they are.
All right. So some of the things we've been talking about just in general, we mentioned the tariffs, and we'll get to that coming up because that literally is it's just kind of a whiplash conversation. I do want to talk about live cattle imports from Mexico. It has resumed; those have been back in place. We touched on this a little bit last week too. It's not open market, and things are coming in at a rapid pace. It's very limited, and it has to go through very significant protocols for those cattle to be coming in. What are you seeing in terms of the pace at which we're bringing them in, and how that is managing at this point?
So I'll hedge myself by saying it's early, right? And there's some delay here. So I went and I pulled. There's some weekly data that I pull through the Livestock Marketing Information Center that I'm a member of. But I've got 3 weeks now that I can look at of live cattle imports from Mexico. So the last one of those actually was the third week in February. So we're about a week behind as we're recording this. But I think for some perspective, that third week of February was the largest volume week thus far. No surprise, right? That was the third of the 3 weeks. But if I just look at that as a percentage of the average weekly imports, basically from January to the end of November of 2024, about 26%. So just kind of, back of the napkin rule of thumb here, math, we're at about 1/4 the pace right now that we were on average in 2024. So sure, live cattle are moving, but given the fact that imports from Mexico would have accounted for a little over 5% of feedlot placements in 2024, it's just evidence that, yeah, it's been a lot slower pace since things have reopened.
And I don't think that pace is going to pick up anytime soon. It doesn't sound like.
It's hard to say. They did find another case, and not that changed the plans per se. And I think you've got a protocol in place they're comfortable with, but I don't think it speaks to volume picking up, any significantly in the short run. So
Probably not. Okay. Tariff conversation. The the date has been March 4th for so long. There was a conversation in a meeting this week that has everybody kind of uncertain if those have been delayed again. Is the volatility that surrounds the uncertainty with the date and the plan moving forward, does that matter more so than at this point the actual tariffs and what things look like?
it's possible, although there's been enough back and forth, right? It's looked like it's going to happen and then it hasn't and so forth. So I think at some point, each time something changes, how do I say it? I guess the emphasis placed on the most recent information becomes a little bit less. So it definitely matters. For some perspective, I'm trying to think, Megan, in 2024, I think China exports to China, I should say, Megan, I'm sorry, accounted for a little less than 1.5% of US beef production. So that's kind of one way to kind of think about quantifying it. Now that's significant, but that kind of puts it in some perspective. Canada and Mexico are both significant, but I always like to point out that we're also a significant market for them. So, the tariffs that are being discussed right now being put on those countries are kind of the first level, right? What's really going to impact potentially the livestock markets is going to be, are there going to be any retaliatory tariffs, right, put in place? And we simply don't know that answer, right? We don't know the front end yet. We certainly don't know the response. You know, the species or the commodities that are most export dependent are the ones that are the most at risk, obviously. So holding everything else constant, our hog market is probably more vulnerable to this than our beef market is. Our grain markets are more vulnerable than certainly the beef markets too. But we're going to have to watch it going forward. And then the impact that it has on the volume of imports in the U.S. also matters. So there's a lot of moving parts. And yeah, I think there's some uncertainty there. But on the same note, we've been talking about this for a while. I think markets are getting, I don't want to say numb, but I think they're not reacting to every single piece of information like they would have maybe back in the middle of January.
Well, it gives us something to talk about week in and week out, right?
Absolutely.
Kenny, thanks for joining us again this week. It's always great to catch up with you. And we have several other reports coming up in the next couple of weeks, so plenty to talk about moving forward.
Absolutely. Safe travels to you.
Thank you. Have a great weekend.
All right, you too.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.